In a new concerning warning sign for the U.S. housing market, we now have Blackstone, one of the biggest real estate owners in America, selling houses and selling houses at a loss. Like this house right behind me here in St. Petersburg, Florida. Blackstone purchased this home 2 years ago for $380,000, and now they have it listed on the market for a $10,000 loss from what they bought it for. It's been on the market for 170 days. And this is a concerning new trend for the US housing market, because if Blackstone is now selling, particularly here in Florida, that says that home prices might be on the way down, that this long-awaited housing crash that many of you have been waiting for, it could be happening right now, because the institutional investors are piling out of the market and they're trying to basically sell at the top, everyone. They're trying to sell before the prices drop even further. And this is a huge, huge deal, because it's a big reversal from what happened 3 years ago, everyone. During the peak of the pandemic, we had a completely different situation occurring. Back in 2020, 2021, 2022, we had these Wall Street investors buying up all the homes. The Wall Street investors raised billions and billions of dollars of capital, and they were buying up homes left and right in cash, preventing regular Americans from buying houses. And that, of course, pushed the prices up and the inventory levels down. I'm sure many of you are familiar with this story, the fact that the investors like Blackstone and other big investors like Invitation Homes, American Homes for Rent, and Progress Residential were buying up a lot of the houses. But now that that's not happening, it represents a huge shift in the market. And you have to ask, what's the future of home prices in a neighborhood like this now that the investors have stopped buying and have started selling? Well, before answering that question for you guys and giving you my projections on just how much home prices are going to drop here in St. Petersburg, Florida, and all across Florida and all across America, I'm going to show you guys the most overvalued housing markets where prices have the chance of dropping the most. I want to talk about some statistics on investor ownership in the US housing market, because I think there's a lot of confusion out there about, number one, just how many homes real estate investors own, and then number two, where they own those homes, and then three, how big these investors are. And it's important for you out there as a home buyer or renter to understand this data and information on these investors, because it's going to have huge implications on the future direction of home prices and rents. And the first thing I want to let you guys all know is that there's 27 million investor-owned homes in America out of 100 million total homes. So about a quarter of all houses are owned by an investor that doesn't live in the house and looks to either rent that house out as a long-term rental or do an Airbnb, or maybe they just use it part-time and do like a timeshare situation. 1/4 of all houses are like that. Now that's a lot, everyone, and that helps explain kind of like why home prices have gone up so much over the last 10 to 20 years. You had all of these investors piling into the market. You can see data from Redfin on investor purchases showed a big run up in purchases during the pandemic. So that helps explain the current situation of why prices are so high. But here's what's actually even more interesting, everyone, is that a majority of the investor ownership in America is through small mom and pop investors. That's a really important point to understand, is that actually, the Blackstones of the world that own that house that's on the market for sale right now, they own about 1% to 2% of all houses in America, and they own about 10% of all investor houses. So the big Wall Street buyers are not the main investor competition in the housing market. It's actually regular people like you and me. Maybe someone has a full-time job and they want to become financially independent, so they become a real estate investor. And maybe they buy up 2 properties or 5 properties or 7 properties or 10 properties. That's the main source of investor ownership. That causes you to ask an interesting question, everyone. What are these amateur mom and pop investors going to do in the down cycle of the housing market, especially now that the professional investors are selling? Now that Blackstone is selling, what does that mean about what the mom and pop investors are going to do? I think it could be a leading indicator. And I think when you see these big corporations starting to hit the sell and the panic button, on these houses, I showed you guys a video a couple weeks ago down here in Florida of an investor called First Key Homes selling a house at a 25% loss. The more we see these corporate investors do that, the more I think probably the amateur investors are going to start doing it too. because I think the big Wall Street corporate guys are seeing what's coming maybe a little bit better. But before getting to my third point here about where the investors are owning and selling the most, I want to talk actually about how I know that that house back there is owned by Blackstone. Because I think maybe some of you might be curious about that. Nick, how did you know that that house back there was owned by Blackstone? Well, it was actually pretty simple, everyone. I drive around America, I go all around, I look at listings on Zillow, and often I'll type in the address into a website called PropWire, propwire.com. And when you do that on PropWire, it then shows you who the owner is of the house. And on that house back there, the owner is an entity called SFR Acquisitions 3. And so, when you see the owner being an entity like that, it's a dead giveaway that it's an investor, right? The next thing I did is I Googled the address of that entity. And under that address in Chicago was a company called Home Partners of America. Home Partners of America is who owns that house, and they were purchased by Blackstone in 2021. So that's how we know that Blackstone is selling houses here. And I've actually called some local realtors down here in St. Petersburg, and they're saying that's not the only house that they're selling. They're saying that there's dozens of houses here in St. Petersburg that Home Partners of America and Blackstone are selling. So it's a widespread thing that's going on. And interestingly, Home Partners of America is a company that owns 28,000 homes across the US. And their business model is something called rent to own. And so basically they buy up a house in a neighborhood like this, and then they rent it out, often at a sky-high rent, to a couple or a person or a household that can't really afford to buy, with the idea that the rent payments would eventually go towards a down payment to buy the house. But apparently that business model isn't really working, and instead what we're seeing is a lot of the renters in these houses are just not able to afford the rent and are getting evicted or are doing something what's called cash for keys, where they can't pay the rent, and instead of having to evict them, Home Partners of America just gives them some cash to leave the property, and then they sell it. And Business Insider actually did an article on this last year about how Home Partners for America is being forced to evict a lot of their tenants or kick them out or give them cash for keys. And so this is yet another example, everyone, of how taking all this Wall Street capital and pushing it into the housing market, causes these distorted effects, right? Because it's this external capital going into an area and pushing up the prices. And a lot of these companies, they have this mission statement that they want to expand home ownership access or do whatever, but in reality, they end up pushing up the prices and the rents. It ends up not being sustainable, and then you get a crash, like we are starting to experience right now here in Florida. We are in the beginning stages of a housing crash. And the way I know that is I just look at the inventory, everyone. I go to www.reventure.app and I type in this zip code here in St. Petersburg, and I can see the inventory of homes for sale in this zip code where Blackstone is selling has gone from 30 homes a couple years ago to 170 homes today. So we have 170 active listings on Reventure app. You can see that data for yourself. And before the pandemic, there was only 100 listings. So we're almost double pre-pandemic levels of inventory. So no wonder the Wall Street investors are selling. They see this data, they use this data, and they know as a result that the prices are going to go down more in the future. Mix that with them struggling to rent the properties to tenants who can afford the rent, and they say to themselves, it's time to get out, it's time to sell. But so let's answer the question I posed in the beginning, everyone. How much can prices drop as a result of these investors selling? Well, the first way to try to answer that question, how much could prices in my neighborhood drop, is to go and look at how overvalued the prices are compared to their long-term norms. That's the first way that you kind of need to approach this. If you are a buyer, an investor, or a seller trying to understand the risk of declining prices in your market, look at how overvalued they are compared to long-term norms. And we could see here on Reventure app that in St. Petersburg, Florida, prices are really overvalued. I mean, a lot of these zip codes are anywhere from 30 to 60% overvalued compared to their long-term norms. And the way that we calculate overvaluation at Reventure app is we look at the historical relationship of home prices to income, something called the home value to income ratio. And you can see that when the home value to income ratio goes up above the long-term norms, that's the signal of a bubble. Same thing happened here back in 2006. We were in a big bubble and there was a big crash. We're in the same type of bubble today. And so that's got to concern you. Huge increase in home value to income ratio, meaning the prices went up way more than local incomes, meaning there's 30, 40, 50% overvaluation. Now, what allowed that to happen, everyone, what allowed the prices to go up above incomes was the fact that investors were buying, right? Investors brought in Wall Street capital, or mom and pop investors brought in their own capital and bid on the homes and bid up the prices more than the locals could afford. But now the opposite is occurring. Now we no longer have that same crush and push of investors pushing values up above local fundamentals. So what has to happen? Well, prices need to drop and or incomes need to go up in order to restore equilibrium to the market and affordability to the market. In Tampa-St, Pete, everyone, this is one of the most overvalued housing markets in America. Prices here are 33 to 34% overvalued compared to their long-term norms. That's similar to what it was in 06. Now, that doesn't mean we're gonna see another 50% crash here. However, it means that there's definitely a lot of downside, especially with spiking inventory. Another market where prices are very overvalued is Orlando. Prices are about 28% overvalued in Orlando. Lots of downside there, spiking inventory there as well. Basically all across Florida, everyone, prices are overvalued. You go down to Miami, there's 34% overvaluation. You go to Naples, there's 23, 24% overvaluation. Most of Florida is in a housing bubble, and most of Florida is exposed to pretty big downside risk as inventory continues to increase and as these investors sell. Now, some other markets that aren't in Florida that are very overvalued include Nashville, Tennessee. Prices in Nashville are 30% overvalued. We're seeing a similar spike in inventory occur there. Home prices in Dallas, Texas are 33% overvalued. Prices, interestingly, in Austin are now only about 15% overvalued because they've gone down quite a bit already. Austin still has some downside, but it might be the first market that's actually a buying opportunity in this housing cycle once prices there drop another 10 to 15%. Another housing market super overvalued with a lot of investors selling is Phoenix. Prices in Phoenix are about 24% overvalued. I've found lots of examples on Zillow of investors selling in Phoenix, so you want to be careful in that market. Lots of downside risk there. Interestingly, a market that investors are now selling in, but where inventory is still pretty low, is Las Vegas, Nevada. So in Las Vegas, there's definitely a lot of investors selling, but inventory levels there are still really low. It's actually the only large metro in America, Vegas, where inventory is down year over year, and prices in Vegas actually continue to go up. So Vegas is a market that's not really following the same path that these other markets are. I do eventually think we'll see a price correction in Vegas. However, we're going to need to see more inventory on that housing market. But really what you guys should do out there as home buyers and investors is do the due diligence for yourself in your city and zip code and look at how overvalued prices are and look at the Reventure app home price forecast score for your area. Because this price forecast is going to tell you the likely direction of prices in the next 6 to 12 months based on the underlying fundamentals like inventory, price cuts, days on the market, and appreciation. In this zip code here, the Reventure app home price forecast score is a 27 out of 100, which is really, really low. So 50 means stable prices. A 27 is one of the lowest scores I've actually seen, indicating heavy downward price pressure for home prices here in St. Petersburg. Head to www.reventure.app to track that data for your market under a premium plan. The cost is only $39 a month, which is ultimately a small fraction of the cost of buying one of these houses. You're going to want data on your side so you can make a more informed decision.